And we are live. And a good morning to you, everyone who's with us today for Behind the Markets. Vernon, how are you doing?
Yes, good morning. Thank you. How are you today?
Good, good, good. And it is Wealth Wednesday. Today we're going to cover a few things. We're going to cover, first thing we're going to cover, sorry, I think we got a little bit of feedback here. But first thing we're going to cover is obviously the market roundup, which is the first time we're doing analysis of the market since last week. We're going to be going through the symposium, data that came out of the symposium and the quarter one report for the budget, how tax revenue is doing, how government budgets are actually doing, and also a few growth prospects that came out of the speech yesterday. We'll also be going through the PDU, the conversation last week about the delivery unit. And what that came out of our main deep dive. But mainly, Vernon, we will be talking about managing one's expectations. That is in the middle of an investment conversation today about managing your expectations and how that allows you to stay in the race a little bit longer. So let's get started today as we run into the markets. First things first, Vernon, it is Wealth Wednesday. Now, coming into the opening of the market, we did see that the stock market did not move yesterday much, stayed up about 0 points, down 0.03% on the week and up 3.31% in the last 30 days, but with up 9.28% still on year to date. Sorry, 33.31% is on the month. The Kwacha did lose a little bit of strength again yesterday, 17.82 or 61. It did close 0.4% down, but the dollar's up 1.56%. On the week, but still year to date down 1.5%. So you can see that this last week has been a partial reversal of the losses that we saw on the Kwacha, on the US dollar for all the dollar holders. Now we are seeing that we're still strong in sell signals of the dollar overall, but we are still getting out of that sell cycle, and the dollar was generally oversold. In terms of the bond market, we do see that we were up about we're up 0.25% versus 0.01% on the previous read. So we are seeing that interest rates did move up as signs of a sell-off. And also, we did see that there was a bit of positive movement upwards, generally in the index that also then moved up even the USD sector of it. Now, looking at currencies, we did see that the rand also did get a little bit weaker again, 0.34% down. So that's also countering any strengthening of the dollar due to a weak rand and weaker outcomes in South Africa. Sorry, guys, I think we got a little bit of feedback still coming in, but 0.34% coming out in South Africa, 0.34% loss on the rand. The rand is down 9.27% year to date. And versus the dollar, which is still down 1.5% year to date. And you can see that the rand has had a lot more negative days, lot of big negative swings that have kept it below the 1 mark. So the rand is still weaker than the kwacha. In terms of the last month, we've actually seen the rand lose 17.86%. This actually cheapens a lot of the things that we're supposed to be getting from South Africa. So keep in mind what's happening there, especially those of you who are doing cross-border business between Zambia and South Africa. The strengthening of the kwacha versus last month has actually created a 17.86% discount on the currency. So you will see a lot of people who are doing drive-by cross-border trading, those ones who go straight to Joburg, pick things up, and then come back quickly. Those are some of the things that you'll probably pick up. Will start to pick up more. That's more of the activities you'll start to see more. This is a good time for people who are doing that kind of business to also start picking up inventory. That's the main one you want to start seeing. I think in his Radical Entrepreneur book, he actually talks about how that's one of his businesses. Just as an example. So those of you who are in that line, that's going to become some of your work to do. Now we are seeing that bonds are up 9.41% year to date. In dollars, they're up 11.26% year to date, and the yields are still up 0.38% year to date. So we are still seeing a healthy bond market, which probably by the end of this year is probably going to end the year somewhere around 18 to 20%. It's on track to end the year somewhere around 18 to 20%, which is going to be about 10% above inflation, which is the usual performance of the bond market. Remember, the bond market averages about 10% above inflation, 9% for being very specific. So we are seeing it operating there. We have seen that a lot of the commodity markets, on fear of global recessions, are starting to crumble. As you can see, copper is down to 8,544. You can see down 0.1% and still down 12%. Only up 2.05% year to date, but down 4.884% on the week. Oil has had a really tough time of it, and that's good for us. Down 11.76% year to date in terms of crude oil prices, 2.89% down yesterday. Still more fears of recession coming in and creeping in, especially as we're waiting for inventory reads and we're waiting for more data coming out. But gold was up 1.48%, back above the 2,000 line, and up 10.66% in USD. But when you're looking in Kwacha, you're seeing that cryptocurrency down 1.2%, even though the dollar was strong yesterday. We're still seeing Bitcoin up 69.59%. Ethereum also dropped about 1% yesterday. They've had a really tough month, 25%, a tough month, both down 13%. In Kwacha versus gold, which is up 1.4, which is up 1.88% and up above 9%. So you can see 9% is where we're seeing the stock market, bond market, and gold. They're all trading around the 9% point this year, especially year to date. So that's actually quite interesting in terms of the data that we're actually working with. So you can see that your wealth insurance assets, that's something that holds many people to. Your wealth insurance assets are starting to take a little bit of a hit. Though they have performed quite strong for the year, the wealth insurance sections of the economy have not too strongly, especially over the last week. But the return of the Kwacha the return of the USD as a stronghold might actually help pick up the strength of those. Now, finally, you are seeing that generally that is the read on all of our assets year to date. As we said, gold, dollars, and stocks have kind of hit this point of convergence where they are operating together. Where they're kind of moving together, and I think that's what's helping. That's what might be helping the situation for. Sorry, not helping. It's actually quite hurtful. But that's actually might be helping the case for getting back into the investor side of the economy, like getting back into the normal side. Inflation year to date, by the way, is about 6.1%. So if we're looking at real growth in terms of all of these, it's about 3.1% in terms of real growth for all of these things. So just subtract 6.1% from all of these, and the bond market is up 3.1% year to date. So 3.3% year to date. Stock market up 3.2% year to date in real terms, and gold is up 2.9% year to date in dollars. So that, remember, we're always looking for inflation plus returns on investment. And that, Vernon, kind of rounds up where we were in terms of our investor outlook of the domestic markets. Now, other things that we should be paying attention to, Vernon, should be the economic calendar on the global market. Now, one of the main things that we were waiting for yesterday was oil data. We're getting into a new month. We're also waiting for inflation, PMI, and also global inflation data. Global inflation reads will be coming out tomorrow. From here, we'll be going through the UN the UN FAO global inflation data. Yesterday, it was also Chinese Labor Day. You know that China actually observes labor. For the guys who used to complain that our previous president used to have too many holidays, they have long holidays in their areas. Because we saw yesterday that China is still on Labor Day. They're pushing Labor Day up to today. They've been having a 5-day Labor Day. Actually, no country has longer holidays than China. Actually, China has a lot of holidays. It's just that when they work, they work. Then when they take a holiday, they take a holiday. Like, those guys don't play around. Actually, they do play around. That's why they take a holiday. Now, let's take a look at some of the data yesterday. We did see, in terms of inflation, we did see national HPI data coming in 2.7% weaker from the UK. We're starting to see deflation. Retail sales in the negative in Germany, showing slowing economy. We also did see PMI data from Italy coming in weak, while German PMI data is still in contractionary territory. Trade balances from Italy did come in stronger, but we are seeing that manufacturing sectors in the major parts of the global economy are still struggling horribly. We did see that CPI data from Europe also came in about 5.6% in terms of core CPI, came down from 5.7 down to 5.6, 0.79% in terms of reads of monthly inflation, and 1% in terms of reads of core monthly inflation. So you are seeing that, unfortunately, the major parts of European inflation are still rising. Core parts are coming down. Other part you did see is that that South Africa's PMI and manufacturing sector is also still in a bad position, still in contractionary territory, showing you that the prices of things coming out of South Africa may continue to get higher and higher, while vehicle sales in their industry did show that there is still a slowing economy happening there. That's why you're getting a very weak rand and a very tough one. Now, you did see that strong PMIs did come out of Mexico, and job openings in America did decline as well. So we are getting softer economic data that continues to fold and fold and fold. Now, what we're expecting in terms of today's economic data is that we'll be waiting for Turkish CPIs are expected to come back down to 51%. We are expecting that mortgage data should show us the mortgage rate that has been on the decline and whether it will continue to be on the decline. U.S. services PMIs are coming out today to show whether PMI data is going to continue being strong, while the main one for today will be the Caixin PMI that's expected to come out of China. Remember, that one affects copper prices altogether. Now, we're also looking at the major news stories that have come out of the global economy before we get into the domestic main two stories that we'll touch into, Vernon. While the major news stories that we came in from yesterday, we did see that Asian FX have crept a little bit higher as the dollar dips, waiting ahead of a Fed hike decision. So we're still waiting for a Federal Reserve hike position. Egypt's current account moves into surplus for October to December. That was some major news that did hit recently. We are also still seeing that the European Union is still pushing for quite strong pandemic hikes as well, while the Saudi Arabian economy is edging closer to reducing its independence on oil, says the IMF. Saudi Arabia has been trying to invest around the world, including trying to invest in solar energy in Zambia and everywhere else around the world. So you can see that they're doing that. India's April services activity hits 13-year high as inflation accelerates. So that's also some major news coming up around the world. And the Fed is likely to hike rates and hint at pausing in the tightening cycle. And that's what everyone is waiting for, whether the Federal Reserve is finally going to take a break on that. That's going to affect our interest rates as well and our expectations. Now, Vernon, one of the big pieces of news that came out last week before we get into our charts of the day was our president went on a rampage on Thursday, and we're gonna give you the summary and forgive the background music because pretty much this is all I heard when I heard the speech that was going on. This is what I was hearing effectively as it was going on. But this was the launch of the delivery unit. That came out. I was down on Mulungushi last week, Thursday, and this was our summary of the launch of the PDU.
To justify to sit in those chairs, ask yourselves a question. We who are seated here, to justify to sit in those chairs, are you working for the people that made you sit in those chairs? Do we earn our right to sit in these chairs? The way you conduct yourself, have you contributed something tangible that you can point at that since I got this privilege to serve, what have I delivered for that person who voted for us? We were elected on the ticket of change. What have you done? PS is from Finance, National Planning. And you know that we were overpaying for any procurement in government, and you know how that was happening. If you were to sit an exam, would you pass if the exam question was that what have you done practically, pragmatically to stop the leakages? Minister of Justice, Attorney General, you were allowing contracts signed that took away value from the people of Zambia. What guidance have you given to ministries who were borrowing money willy-nilly, those before you were allowing that? What have you done to stop that? Minister of Lands, are people getting their certificates of title on time? You nod your head. I know what's going on there. It's not happening. Files are missing. Somebody wants to put a factory to get a title deed 1 month, 2 months, 3 months, 6 months. Minister of Energy, set out clear deliverables to take us out of load shedding. We're not out of it yet. It means shortening decisions. Close these transactions quickly. We will never buy power at a loss. That's suicidal. ZEMA should not take 18 months to assess the environmental impact of the project. We don't have 18 months. I hear you civil servants are saying, oh, we are permanent. These politicians will come and go. You got it wrong there. Some of you complain that I send you too many notes. If I send you too many notes, you must know I'm sending a signal to you. The machine code government can grind you to frustration. But why should we be paid our salaries? It is to travel. Ministers fill in forms for the president to sign to travel. Some ministers, they are perpetually traveling. Then you check the deliverables. You should be ashamed to fill in a form to the president to allow you to travel before you've done your basics. And some of you say, no, key weekend. No, it's a weekend. PS, minister, you work in the office of the president, you're saying it's a weekend, and we report for work. Tea, coffee, 17 hours, knocking off time. Work is not 8 hours to 17 hours. No, I disagree. Work is ticking off deliverables. I learned it from my own village. We were made to wake up 04 in the morning. Today you call it child abuse. I disagree. That's training. Most of you are guilty here. Hopefully from today, we will wash away the shame, first from ourselves. I'm tired of swearing in people.
For those of you who are a bit too young, the background music there was Tupac's "Hit 'Em Up." Because that was
the best part, like he's tired of swearing in people.
At the beginning he said, and I cut that part out. But at the beginning he said, I don't want to read speeches here. I want to speak my mind. So for 40 minutes, he just freestyled and went.
Yeah, something to say.
This was somebody was holding beef for a long time. So let's unpack everything that was said in there. So I think what he was trying to say is, let's unpack what was being said there. First things first, I think people were being asked, look, guys, have you recognized that there are people here who voted for you? And they're going to hold you to certain things. They're going to hold you to certain deliverables. So people are asking, what is the purpose of the deliverables unit? I think he's trying to bring in a private sector technique of managing deliverables. Because government is a huge entity, he's had to bring in people to start now checking performance, because this is performance reviews. You know what this is like? This is like human resource management for his management team. That's exactly what this is. So it's HR for management. And you find this in big corporations where there are people who actually do performance reviews for management. But what they're trying to make sure is that deliverables are continuously being done. One, they're being stated clearly. Two, they're being operated now. So look, from a perspective of a person who wants to see this country run more methodically, I'd like to see more company running like that. Now, I hope that's not just we always hope that's not just a performance at the end of the day, and that should be something that that should actually be that should be done. Okay, so that's what people now need to be done. We need to start having deliverables clearly stated out for each ministry, and we need to make sure that each ministry holds, especially to the vision of the country. He's talking about the fact that, look, I put the minister of finance and the ST on a call with my counterparts for the credit committee, because he said, look, that's my personal deliverable. So I understand the conversation about deliverables. People may not think about that because in this country, this is the real thing. That's why he was saying, people, there's no such thing as weekend when you're working in senior government.
No.
There's no such thing as key weekend. There's no such thing as knocking off at 5. You're running a country. This is not a game anymore. You don't just go to work and knock off. Then you have tea, coffee, you get your salary. So I think that one. I think there was beef there. I think somebody was caught. Okay.
Yeah.
So I think that's the main thing. That's the main thing I just wanted to get people to understand. Now, the reason I'm saying this, the reason I'm putting this out there, and I know some people may ask about this, is the reason I'm putting this out there is because the efficacy of government is usually what holds back business. Okay? It is a funny thing to look at, but the efficacy of government is what holds back business. Now, there were a few things that were brought out there. One, energy. He did talk about the fact that, look, guys, we're not out of load shedding. and we need to actually start setting this stuff out. We seem to be taking too long to get these power plants up and to get these transactions done, and the fact that we end up having to import electricity, that's going to be harmful for our. That's going to end up being harmful for our, what's it called? Our balance for our forex rate. That is one that's going to end up being harmful. So if we can start getting a press on getting the energy sector running properly as quickly as possible, that's actually going to be quite important. Then we talked about things like lands and stuff like that. Those are administrative issues. But the main thing he was pointing at is when factories need to be built for manufacturing growth and for economic growth, we can't have that stagnation in the factory sector. One, because the industrial sector is extremely important to the economic growth of this country. In fact, the industrial sector is going to be driving it. So if lands are taking long to issue out titles, if Zima is taking long to do authorization, if energy is taking long to do the deals that are coming in, the industrial sector ends up suffering, and the growth prospects of Zambia hitting 4.2% and 4.7% economic growth. For those who are asking me if this is about wealth, because this is my job, I know exactly how to do it. This is my job of bringing it back here and circling it back, is to try and make sure that the economic growth of this country actually stands. So, look, let me explain something, I think, to people whenever I make a comment about politicians. I'm indifferent about them, okay? There's no support base or anything. I'm indifferent about these guys. And the reason I say it is because politicians will change. Okay, the ability to determine your future is not going to be based on politicians, but you are going to have to keep an eye on what is being said when policy is being held. So a few things did come out of that PDU meeting, as funny as that was, but the main thing is that you are expected to start seeing an efficacy towards government. And I'm going to start bringing it out in terms of the budget review. Now, another piece of news did actually come out of that PDU meeting, and that came towards the credit committee outcome. We haven't had any notes yet coming from the ministry about the output, about the minister, about the output of the credit committee. Though these are still discussions, because he did say that in that meeting that he did stick the minister into a formal credit committee. So that's that's some of the main conversations there. He did say that, look, he did have a problem with one of his counterpart leaders who did not want to have a meeting because of the weekend. That's why he was saying that weekend thing. Okay, but he was pushing on that, saying we are trying to have these meetings now as opposed to next month, and we're actually calling on these committees to start having these meetings now instead of next month. So these are some conversations that we are seeing pushing some of the agendas here. So for those of you who want to keep an eye on this, as funny as these things can be, please read into the nuggets of policy and how those things have an implication on your wealth. Because if you become blind to them, you will actually make a few mistakes in the market. Okay. One, when he mentions that he's trying to have credit committee meetings early, that's a signal to you that interest rates may not hold up as long as possible, because obviously he's trying to press the needle. But there are factors outside of his control. Things like the global financial system. Those are one of them there. Second thing I think we have to pay attention to also is that we are also looking, as I said, is trying to deal with our energy levels. The energy levels of this country are going to be a problem for us going forward. So we need to make sure electricity is managed well. And I think that was a key gripe that he had there. He did talk about also trying to make sure that contracts are signed properly to make sure that spending is held correctly. Now, that's a very important one. You know why I say this, Vernon? If the government is going to come onto the bond market regularly, the last government did that because they were just being loose with the purse. They were just spending willy-nilly, okay, without questioning contracts, anything. So they had to keep raising money through the bond markets, raising the interest rate. But if you have people who are being prudent about what they're spending money on, what tends to happen is that they tend to rely more on tax than they'll rely on bonds. And therefore, even if we're pushing interest rates up in our bond bids, even if they don't have enough, they'll say, you know what, we won't take those high interest rates. We'd rather tighten our belts and we'd rather go and work for the tax money. That's a difference in policy. Listen to what he was saying to the minister of what's it? The minister of law. Is it law? What's the minister? Justice, sorry.
Is that
Listen to what he was saying to the minister. My brain switched off for a second. Listen to what he was saying to the Minister of Justice when he was saying, make sure that the contracts that are signed, there's due diligence here to make sure that people are not just borrowing anyhow, but people are actually running according to the budgets that they have, and they're making sure that they're prudently spending their money. So expenditure controls are being stressed there. Land is being stressed there. Manufacturing title deeds are trying to be stressed there. Electricity is being stressed there. I purposefully picked those snippets because that is pro-growth, retained spending policy, which pushes interest rates flatter and pushes growth forward harder. So that's a signal of the government's posture going forward. Now, it still means they have to get over the hurdle of the debt. Okay, so I hope that makes sense to as many people. When you are building on your wealth, that makes sense to going to a hold of people. Right now, the next thing that I want to try and get to is the yesterday's conversation that the minister did have in our deep dive. Minister of Finance had yesterday regarding our country. Now, the first thing he did point out, Vernon, was milli meal prices. He actually gave an explanation of where the price of milli meal is coming from. And he actually pointed out, which is what we've been saying, is that the price of wealth, the price of currently our country is faced with a challenge of huge demand and other products from the region. And this regional demand is now reflecting in our milli meal prices. So this is what we call demand squeezed inflation. So it's coming in where there's a lot of demand coming from the region due to shortages of food around the continent that is driving up prices. Now, yes, there's smuggling going on, but there's also just huge demand. Now, we should respond to this not through cries and complaints, but through actually increased productivity. And this is why he was talking about farm block investment is very important going forward so that we can meet these export demands. But he said it will require that necessary skills and capital are brought in. And this is why the farm block project is extremely important. And he said money has been set aside for the farm block project. So it is now time to get it going forward. So that should now try and help curb the inflation there. It might help curb the inflation. But remember that farmers, Milton Friedman said this about inflation. He said, inflation is the funniest complaint that you find from people because everyone wants the cost of things they buy to go down, but they want the cost of things they sell to go up. For example, everyone wants their salary to rise, but they want everyone else's income to go down. Okay, inflation reflects the selfishness of humanity in that, unfortunately, and whether it's right or wrong, but it does reflect the selfishness of humanity, that nobody will ever go to their boss and say, boss, the price of things have come down. You can bring my salary down. Give me the name of anyone who does that, Fred. Give me the name of anyone who, when there's deflation, they go and volunteer to drop their salary. No one does that. Okay, so the reality that comes out of it is that people do the tough part is even the farmers want their grain prices up. Okay, we want the milli meal price down because we're buying it, but the farmer who's selling that grain wants the maize price up so that they can produce more, and a higher maize price incentivizes the farmer to produce more. That's the reality. This is what I mean when I say that as Zambia, if we want to see job creation, we're gonna have to face a bit of inflation. We're going to have to face a little bit of inflation. You can't have inflation-free job creation. Do not kid yourself. Because in order for us to have incentives for factories to be built and for businesses to come about, you need to have an inflationary environment which makes it attractive to people to build businesses in those areas. You want to produce more maize, a higher maize price will get more people to go into the maize production sector. You want to produce more oil, people when the oil prices go up, then you start getting more producers in those sectors. The higher the prices of things, the more supply you get on the market. And the more supply you get on the market, the more jobs are created on the market. Does everyone seem to understand this now? So this is why there's going to be some interim inflationary pain to get to the industrial job creation we're looking for. To offer people zero inflation and economic growth and job creation is not correct. Now, we did see in the presentation, at the end of the presentation, that the ST, I think, did say that he is expecting inflation to get back to the 6 to 8% range by the end of this year. I think that's not being realistic. That one is not being realistic. I don't even think it's going to get back to the 6 to 8% range until 2025. Okay, that's probably when we might see it to the 6 to 8% range of inflation. That's potentially what we might start to see. So going forward, that you have to ask us, you will see a lot more growth policy. Now, he did say that mines are still struggling, but the expectation that mining investment will come to fruition. There is the expectation also that construction sector will pick up also this quarter. So for got cement stocks, look into that quite quickly because he did say there is some CDF policy revisions that are being done to help. For example, there are some projects on the table. 120 schools are supposed to be built in 2023. The PPP model for roads should also help with the construction sector and also agricultural self-sufficiency. That is one of the things that could bring the fertilizer down. Okay, it could bring the food prices down if we can bring fertilizer prices down. And you talked about that as well. Though I've often said that we've kept the industrial hemp sector of this country on the sidelines, when that actually has a bigger opportunity to bring the fertilizer prices down even more, and also bring the growing costs of maize down. Because once you manage industrial hemp into the cycle of producing fertilizer, organic fertilizer, you will get a lower cost organic fertilizer. 2, you get the removal of having to use pesticides. You don't have to use as much pesticides, and you get enriched soil. So less use of fertilizer, less use of pesticides, good yields, healthy yields. And also, this is something that can be exported, so you can also strengthen the currency much stronger. So I know there's a battle because this has been an investment done by our friends from the East, the Chinese, who have come in to do a urea fertilizer plant. But we seem to be sidelining their biggest competition, to be industrial hemp, when both should be existing and both should be on the market. But it appears that we're doing heavy regulations on hemp instead of trying to use that to feed into our fertilizer supply chain. And there'll always be conversations and talks, and meetings won't happen, and ministers will refuse to meet. We're talking about deliverables, but the hemp industry has been asking, and now we're going to bring it back to it. The hemp industry has been asking for deliverables to be met in this area to try and help with fertilizer, but they have been met with constant delay. So they're going to look at that conversation about the president talking about meeting deliverables with tongue in cheek, saying, "What's this?" Okay, you're talking about deliverables, but we've been asking you people to sit and have ministerial meetings and set this thing up so that we can actually get to the point of production. But you've been walking away from this. Now, I say this again, people: separate cannabis and hemp. Separate those two things. They're not the same. You can't smoke hemp and get high. You can't. Okay, cannabis is a different thing. Yes, it is in the same family, quote unquote, but it is not street side marijuana. This is a thing that's used to make twine. It's used to make buildings. It's used to make clothes. It's an actual industrial part that if we utilized it in this country, you don't have to import as much clothes. You don't have to import fertilizer, and you can actually now reduce some of your fuel imports because it can also make some of the ethanol that we're trying to blend fuel with. These are the things that we can do, by the way, but we seem to be shooting ourselves in the foot and refusing to do it. So that's a deep dive into that conversation that we're having. Now, I also want to quickly go into, Vernon, one quick conversation about about yesterday's reading. One of the big things that did come out yesterday is that Zambia did have what's called a primary surplus. Now, a primary surplus means when you take away interest payments and you take away any payments of stimulus or anything of the court, repaying assets or repaying debt. So I just want to check if I'm in there. When you take away any payments such as repaying debt, for example, you will find that Zambia did have a primary surplus of about 200 million kwacha for quarter 1 2023 versus the targeted, there was expected to be a deficit of 940 million kwacha. So it means that the government performed better in terms of taxes. We did see also that that this is still much better than the deficit we saw in December, where there was a 5 billion kwacha deficit in December 2022 on the government budget. But this is still much lower than the surplus we had of 1.85 billion kwacha in 2022 in the early parts. So in 2022. So 2023, we are starting the year on a surplus. This is a signal, obviously, that your government is still not desperate for cash. When they go into bond auctions, expect interest rates to still be held where they are. Nobody's going to be pushing them down because there's no excess demand. But because of the lack of demand, you're not going to be seeing interest rates going up anytime soon or any quickly because the government seems to be managing itself. Now, obviously, in general, you're seeing that the government is in a deficit, 12 billion kwacha, mainly because of debt repayments, and there was debt repayments and also settling of financial payments. This was still just slightly lower than the target of 12.25 billion kwacha. And we did see that that this is much lower still. This is a much lower deficit than what we saw last quarter in December 2022. This is according to data from Ministry of Finance. Now, when you're taking a look at the quarterly revenues that you're seeing from the government, you are seeing that tax revenue did actually go up from last year. It was 19 billion last year. It's up to 21 billion this year, a little bit below target of 21.34 billion. But you saw tax revenue and non-tax revenue came in at 4.6. That's why you're getting total revenue did come in 2.6% above target. It was mainly non-tax revenue that was the contributor to that. But if you're looking at a year-on-year basis or a quarter-on-quarter basis, tax revenue has been one of the key factors that did push in growth. Now, if you look at the breakdowns of it very carefully, you are seeing that from last year, domestic VAT is up double what it was, and import VAT was the key driver, up from 3 billion to about 5.13 billion. That's almost a doubling. So these two have both doubled. Domestic VAT has doubled from where it was, and it's actually up from the last quarter, where you're actually seeing it up about 60% from the last quarter, while import VAT is up over 20%, over 20% from the last quarter, 25% over the last quarter. Now we're seeing that when it comes to our company tax, that's been the one that's really weak, down from the previous and down from the target. So we are seeing that company tax has been quite weak. Company tax has been relatively weak from the last quarter and from the target. It's down to 2.9 billion. This is mainly because mining companies have really remitted very low taxes, though this is a preliminary figure. Pay as you earn has been flat, came in below target, a little bit higher than the last quarter, but even lower than the previous year in the same quarter, while withholding tax has pretty much been flat as well. So really the main changes have been poor company tax due to mining companies having a poor run at it, and also strong VAT. VAT has been the key driver of revenue growth for the government, and therefore we can see that their lack of a need for coming into the market for funds to be raised has really been due to stronger VAT. Now, when we're taking a look also at costs, we are seeing that primary costs did move up quite drastically from the previous year, and also just came in below target from the quarter. So they managed to hold in where there was spending. So this is what I mean by spending controls are starting to be really strengthened here, while you're seeing that financial payments really came in really heavy. Financial expenditures such as interest payments, and mainly it was interest payments. But something that was of interest, and this is the summary table that we've put up in terms of the percentage performance of the budget as it is. And you can see from the expenditure side, personal emoluments were up 20%, but 69% up in transfers and subsidies from the previous year, but down quarter on quarter by 30.7%. So you can see that there has been a cooling down period. But the main thing that has come up is social benefits. That one came up really high and came in way above target with non-financial assets in terms of roads. Those ones you can see, roads and infrastructure, they're spending much less. But the expectation, obviously, is that due to CDF rationalization, that might help. Now, another part that we're taking a look also at here is financial assets. In terms of paying down financial assets, the government did pay about 3.32 billion. This is higher 30% than where we were last year, and also higher this year. A lot of this comes from contractors being paid. So suppliers were paid about 3 billion kwacha worth of suppliers paid. So this means that in total, the government has re-injected about 5 billion kwacha of liquidity back into the market this year. Because when you add it, you are seeing that about 3.3 billion coming in from financial, about 3.3 billion being paid out 3 billion being paid out in terms of suppliers, while about 1.7 billion has been paid out through NAPSA, through ZNFP repayments, and also this 20%. So we are seeing about 5 billion kwacha in the quarter of liquidity has been injected back into the economy, into the hands of the people and into the hands of the business houses. Interest payments were up 13% from last year and up 24% from where they were quarter on quarter. So interest payments are part of the stronger part of what's also driving government expenditure. So you can see that we are in a fiscal surplus, which is 0.21%, up 121% from the target, up 103% quarter on quarter, but down 88% from where we were last year. And we're also seeing that we had a negative, we had a deficit of 12% on the overall side of the government budget. And that has been the rundown for how we are doing in general. So we will be talking going forward about managing one's expectations. And that's a conversation that we've been holding off from today, but trying to look at whether deliverables will be held correctly and whether we can expect the government to hold a much more stringent budget. That's going to affect the performance of the bond market. And that's why you're seeing a lot of these undersubscribed bond markets where even there is an excess amount of bids, that the government is rejecting higher interest bids because they have the money sitting from their taxes. They're operating cash flow surplus from the operational perspective. They are positive there. It's just that now they're trying to dismantle arrears and debts and all these things. So that's really where they're targeting a lot of their resources currently. And they're also trying to work on the debt overhang to then try and see if they can get a stronger flush of capital coming in through the bond market that they can now trigger moving forward. So that's our wealth outlook here, that balancing of the government budget in quarter one does signal a lot of prudence, and therefore does signal that the downward pressure in the medium term on interest rates. In the short term, we can expect there still might be some upward pressure, but downwards pressure on interest rates in the medium to long term. So this is why I keep telling people, pile into your fixed income assets and prep yourself into your stock markets. That'll give you the direction you need to start looking at. So pile into your bonds as much as possible, because these are the interest rates that you're holding on to. Inflation is still a little bit sticky upwards, but heading towards about 11.4%, at least 12% by the end of the year. So at probably about 12%, but 11.4%, and then and then try and start to position yourself for especially stocks that have got lower gearing and stocks that are due to pay dividends or likely to pay dividends. Those are the ones you want to start going into with growth prospects, and especially those in the industrial sector. And the ones in the sectors that we are actually talking about, where energy is concerned, where construction I think this might be some good news for companies like Lafarge. But remember that there's a lot of competition in the cement industry going forward. So with that, to everyone, we'd like to thank you for joining us this morning as we went through a rundown of the market. Markets are still stiff. We have gotten, obviously, we are having the conversations about whether the industrial sector is going to be given room to run and the reduction of red tape. In fact, even in the conversation there, the minister did talk about the removal of red tape to help growth. The number one issue I think on the administration's hand is growth. So look for things that push growth. What is the posture of a pro-growth portfolio? That is what will then line up with the economy. So just make sure that you've got components of pro-growth sitting in your portfolio. That's usually some stock market possibilities in there, but also keep the consistent revenue that comes in from interest rates. That comes in from fixed income instruments. So to everyone, thank you very much for joining us. Vernon unfortunately got lost in the wind, but we will get back to him. And thanks, and have a wonderful day.